Hey everyone, and welcome to another deep dive. This time we're tackling Hindustan Unilever's Q3 FY25 performance. And we've got a lot to unpack.
Yeah, we do. We've got their official financial reports, the press release with all the management commentary.
Oh, and we even have some investor questions that you listeners sent in.
Definitely going to try to get to those. So
Okay.
let's dive right in.
All right, sounds good. The reports highlight a 2% underlying sales growth, okay, but then a flat underlying volume growth.
Yeah.
So did they sell more products, less? What happened?
Well, that's where it gets kind of interesting, right? Because they did see an increase in revenue, but it's not necessarily from selling more products, more about the mix of what they sold. The report mentions a negative mix impact, which basically means they sold more of their lower priced products.
Okay, so more boxes, but maybe some of those boxes had just the cheaper stuff in it.
Exactly. Think of it that way.
Yeah.
More boxes out the door, but maybe not as much value in each one.
Okay, so even though the sheer volume, went up, the shift towards like the lower price stuff resulted in that flat underlying volume growth. I get it. Reminds us to, look beyond just the surface level.
Absolutely. Always more to the story than just the numbers.
All right, so let's unpack HUL's performance across its different segments, starting with home care.
Yeah.
What jumped out at you?
Well, in home care, the report highlighted Rinbar's relaunch with all that new technology and then the introduction of the Sun Liquid dishwash. And what's interesting
Those
is,
stood out to me too. What about them?
well, they kind of reveal HUL's strategy here. The
Yeah.
Winbar, for example, it's a classic product, right? But they've given it this like modern twist. It's a pretty smart way to keep their loyal customers happy, but also attract maybe a newer generation that might be drawn to, the newer brands.
Right, makes sense.
Yeah.
Keep it fresh.
Yeah, contemporizing the core is what they call it. Basically staying relevant.
I like that.
Yeah.
And what about that Sun dishwash? What's going on there?
Well, this is HUL maybe dipping their toes into market making.
Hmm.
Liquid dishwash is generally considered a premium product in India, but with Sun, they're trying to make it, more accessible, more people can buy it. And it's all about identifying those emerging trends and then creating products that cater to a wider consumer base, maybe even shaping those future consumer habits.
So they're not just reacting to the trends, they're actually trying to influence them.
Hmm.
Huh. Pretty ambitious.
Definitely.
Speaking of ambition, let's talk about that minimalist acquisition. A digital-first premium beauty brand. That's a pretty bold move.
It is. To understand why they did that, you really have to look at Minimalist's positioning. They're known for their premium actives-led skincare. That means scientifically backed ingredients, which is where HUL wants to dominate. But what's really remarkable is they've already been profitable since their launch just a few years ago, and already an annual revenue of over 500 crore.
Wow.
Yeah.
Okay, so how does minimalist fit into HUL's existing beauty brands?
That's where this idea of synergy comes in, right? Because Minimalist operates primarily in the masstige segment, which is that sweet spot right between mass and prestige beauty products. And it's a rapidly growing market. So this acquisition gives HUL a strong foothold in an area they haven't really been present in before.
Right, so filling a gap, and they're getting a brand that's already doing really well.
Exactly. Plus, think about all that expertise in e-commerce and digital marketing that HUL is gaining here.
Yeah, that's a good point. Aligns with their push to strengthen their online presence, for sure. It seems like they're really set on becoming the #1 player in all of beauty. At least that's what their press release is indicating.
Definitely making a statement with this acquisition. Shows they're serious and willing to make big moves to get there.
Now let's flip the script for a sec. Imagine you are a loyal minimalist customer. How do you think this might change your experience with the brand?
Well, I think the most immediate change could be increased accessibility. HUL has that huge distribution network.
Huge.
So minimalist products might be on more shelves all across India.
So somebody who likes to shop in an actual store might actually be able to find it much easier now.
Yeah.
Good
Yeah,
point.
exactly. Now,
Do you think?
do you think the quality or the brand might change at all under HUL?
It's hard to say, but HUL has said that minimalist founders will continue to run the business for at least 2 years.
Okay.
So it suggests they want to preserve what makes the brand unique. However, over time, as HUL leverages its resources to, scale the brand, we might see some shifts. Maybe new product lines. Maybe they expand into new categories.
Okay. Interesting. Keep an eye on that one.
Yeah.
Okay, enough about minimalist for now. What about home care's overall performance? What'd the report say?
Home care actually had a strong quarter overall, 6% underlying sales growth, which was fueled by high single-digit growth in both fabric wash and household care. And they specifically mentioned that liquid detergents are outperforming.
Interesting.
So consumers are shifting towards those like premium formats?
Yep.
Yeah, I guess it makes sense. People are willing to spend a bit more if it's
Mhm.
more convenient or maybe they think it's better.
It's a trend we're seeing across a few different segments, this preference for premium
Yeah.
products.
Now, beauty and well-being. This one kind of stood out to me because of the launch of Dove's new serum shower range.
Mm.
I mean, serum shower, it just sounds expensive.
It does, doesn't it?
Yeah.
But that's exactly HUL's premiumization strategy in beauty. They're not just going for biggest, they want that higher end of the market where people are willing to pay more because they think it's higher quality
Right.
or it has extra benefits. The report also mentioned new launches in hair care like the Dove hair and scalp therapy and Tresemma's silk press range. All those are part of their future core and market maker categories,
Yeah.
very specifically targeting needs and driving premiumization.
Okay, so capturing those, what is it, like aspirational customers?
Yeah,
The ones that want the fancy stuff?
exactly.
But how did the segment do overall?
Bit of a mixed bag. Hair care delivered a robust mid-single-digit volume growth, but skincare and color cosmetics had a pretty muted quarter.
Why the slowdown in skincare? Any ideas?
They said two things: a delayed winter and the performance of their mass skin portfolio. Basically, the cold weather, it arrived later than usual, and so it impacted those sales of, like, winter-specific skincare products.
Oh, wow. So, like, the weather is actually affecting a multi-billion-dollar company. Huh. Interesting.
Yeah, it's a good reminder that even these giants are subject to things they can't control.
Okay, let's move on to personal care. What stood out to you there?
Well, this segment's facing some challenges, primarily because of a decline in those hygiene-focused products within skin cleansing. It seems like that pandemic-driven surge in demand for, hygiene products is waning, but they're already taking action. They're talking about a relaunch of Life Buoy,
Okay.
aiming to reinvigorate that segment.
Interesting. I'm curious to see how they reposition Life Buoy in a post-pandemic world. What else is happening in personal care?
Well, the bright spot is body wash, delivering strong double-digit growth, solidifying its leadership position. And again, we see that trend towards the premium formats.
Makes sense.
Hmm.
All right, last but certainly not least, let's talk about foods. What's going on over there?
Well, foods saw a flat underlying sales growth, so mid-single-digit price growth, but it was offset by a decline in volume. So some challenges there. However, there is a silver lining. The report highlights a sequential improvement in both packaged foods and beverages.
Hold on, what does sequential improvement actually mean?
Oh, it just means their performance improved compared to the previous quarter. So while they may not be exceeding last year's numbers, they are showing signs of recovery.
Okay, good. They're moving in the right direction.
Right.
I'm curious about their packaged foods performance. Any particular categories that stood out?
Yeah, actually, their future core and market makers portfolio within packaged foods delivered strong growth. That's things like ketchup, mayonnaise, international sauces, even like ready-to-cook mixes, basically products that cater to, evolving tastes and those busier lifestyles.
Yeah, people want to cook, but they want it to be easy.
Exactly.
But what about the more traditional categories like tea?
Well, tea saw low single-digit growth, mostly driven by price increases. It's a very competitive market.
Right.
It seems like they're relying on that strategic pricing to kind of maintain their position.
Yeah. Got to find that balance between staying competitive, but also, dealing with all those rising costs.
Exactly. And speaking of rising costs, that leads us right into one of the biggest challenges they're facing: inflation.
Yes, inflation has been a concern globally. Did HUL address how it's impacting them specifically?
They did. The reports and that press release repeatedly mentioned inflation, especially regarding tea and palm oil prices, which are still inflated compared to last year.
So how are they dealing with this? Are they just raising prices for consumers?
Well, they are taking some pricing actions.
Yeah.
But they're also really focusing on this thing they call the net productivity program to find efficiencies, cost savings within their operations. It's about becoming more cost effective without just constantly raising prices.
Yeah, that's smart. You can't just keep squeezing more money out of people. Got to find those efficiencies.
Exactly.
Now, one of the investor questions we got specifically asked about the geographic performance, did HUL break down their sales by region?
They didn't provide a detailed breakdown, but they did emphasize this winning in many Indias 2.0 strategy,
Right.
which focuses on tailoring their offerings to all the unique needs and preferences of the different regions in India.
Okay. So basically they're saying, hey, we get it. India is diverse and one size doesn't fit all.
Exactly.
Okay, before we move on, there's one more investor question I want to touch on. The competitor comparison. How's HUL stacking up against everyone else in the FMCG space?
Well, they didn't name any names, but they did stress they're strengthening their competitive edge. They're investing heavily in what they call unmissable brand superiority.
Wait, unmissable brand superiority? What is that?
Yeah, so it's basically an internal metric to measure how their brands stack up against the competition in the eyes of the consumer, looking at product quality, perception of the brand, innovation, even consumer loyalty. It's about creating brands that consumers just can't resist.
So they're not just throwing money at advertising. They're really focused on building brands that actually offer value, something different.
Exactly. And the results show that. The reports actually highlight that nearly 60% of their businesses have gained market share in the past year. So it's working.
Okay, wow. So we've covered a lot already. Performance across different segments, that deep dive into minimalists, the challenges they're facing, and the outlook.
Yeah, we barely scratched the surface, though. Still so much to uncover.
Right, we have a lot more to explore. We'll be back with part 2, where we dig even deeper into HUL's Q3 FY25 performance. Okay, so we're back, and I have to say, I'm super curious to hear more about this unmissable brand superiority. Like, it sounds like it's really at the heart of their strategy.
Oh, it is. And the reports actually give us some pretty interesting metrics to track their progress. Like, they said that over 80% of their turnover comes from businesses that are considered superior based on their UBS assessment.
80%.
Yeah.
That's a huge chunk of their business.
It is. And remember, this UBS thing, it's not just about marketing hype. They're looking at product quality, how people perceive the brand, innovation, consumer loyalty, the whole 9 yards. It's about a really superior experience.
It's about being better, not just saying you're better.
Exactly. And to back that up, the report highlights that almost 60% of their businesses have actually gained market share in the past year. So it's working.
Yeah, that's pretty impressive.
Yeah.
All right, so it's clear that HUL is playing the long game here, investing in brand building and innovation to ensure, sustainable growth. Now, earlier we talked about some of those headwinds they're facing, like that subdued consumption and inflation. What did the management actually have to say about these challenges?
Well, the press release actually has some pretty insightful quotes from HUL's CEO and Managing Director, Rohit Jawa, and he acknowledges that FMCG demand trends remain subdued with continued moderation in urban growth, while rural sustained its gradual recovery.
So basically confirming what we're seeing in the numbers.
Right. Kind of a two-speed India situation. Urban markets are slowing down, while rural markets are gradually picking up.
Okay. So not great, but also not terrible.
Yeah, and he actually goes on to say that even with all of this, HUL still delivered competitive growth by driving unmissable brand superiority, investing behind brands and capabilities whilst maintaining healthy margins.
That sounds like a very deliberate and confident strategy, like they're not panicking.
No, they're not. They're sticking to their plan and focusing on what they can control. He also emphasized their commitment to unlocking a billion aspirations by contemporizing our core business, driving premiumization through our future core business, and ushering market making in new demand spaces.
Okay, I'm going to need you to break that down for me.
It sounds super complicated, but it's actually a pretty clear vision. They're basically saying, hey, we're going to cater to the evolving needs of Indian consumers. They'll modernize their existing brands, introduce premium products, and create entirely new categories to meet those demands, hitting the market from all angles.
Ambitious. But HUL usually pulls it off.
Yeah, they do.
Any other little nuggets of wisdom in the management commentary?
Oh, yeah, there's this one quote I really liked. Mr. Jawa states, "While we keep a close watch on the pace of recovery and the broader economic outlook in the short term, we remain confident of the medium to long-term opportunity in the Indian FMCG sector and HUL's ability to grow competitively."
Okay, so a healthy dose of realism, but ultimately optimistic about the future.
Exactly. Not blind optimism, just confidence based on what they know about the market and their own capabilities.
I like that. So far, we've covered headline numbers, segment performance, that deep dive into minimalists, the challenges, and the outlook. What else is hiding in these reports?
Well, there are a couple other interesting points worth mentioning. The ice cream demerger, for one.
Oh, yeah, right. They're spinning off their ice cream business. Why are they doing that? Ice cream's a pretty big part of their business, right?
It is. But they believe this demerger will unlock value for shareholders by allowing the ice cream business to operate, with more focus, more agility. Basically, it can make its own moves, react quicker.
So they're streamlining, letting go of some branches to focus on the core.
Exactly. And they've already incorporated a new company called Quality Walls India Limited.
Wow, so this is happening.
Yeah.
What about the financial side of things? What does this mean for people who own HUL stock?
Well, the reports don't give us all the nitty-gritty financial details, but they did say that shareholders will receive a 1.1 share entitlement ratio. So for every share of HUL you own, you get one share of this new ice cream company.
That sounds like a pretty sweet deal.
Yeah,
You get to keep your HUL shares and get a piece of that potential growth.
exactly. Win-win. And another example of HUL's commitment to maximizing value for those shareholders.
You said there was one more point you wanted to touch on.
Oh, yeah, something you don't usually see highlighted in a financial report, HUL's company culture.
Culture. Interesting.
Yeah, they actually highlighted their strong culture of purpose, innovation, and inclusivity as a key driver of their success.
So it's not just about the numbers. It's about creating a good environment where people can do their best work.
Exactly. And
Yeah.
they believe this strong culture is going to be essential for attracting and retaining top talent, which is super important these days.
I like that they're acknowledging that, there are actual people behind all these numbers.
Absolutely.
Okay, so we've analyzed these reports, dissected the management commentary, even gotten a glimpse into their culture. But remember, our mission was to answer those investor questions. Did we cover everything?
Well, we touched upon most of them, either directly or indirectly. We talked about revenue and profit growth, how each segment performed, market share, their approach in different regions, how they're handling inflation and competition, even those sustainability initiatives.
That's a pretty comprehensive list. Anything we missed? Or maybe something that needs a bit more attention?
There were a couple we didn't get to specifically. One was about the impact of all this digital transformation and e-commerce on their performance.
Right. That's a huge trend.
Hmm.
Did the reports shed any light on that?
They didn't give us specific numbers, but they did emphasize how important digital channels are. They mentioned their winning in many India's 2.0 strategy includes focusing on channels of the future, which probably includes things like e-commerce and those direct-to-consumer models.
Right. And don't forget about that minimalist acquisition. That's a pretty clear signal they're serious about winning in the digital space.
Absolutely. Another question we didn't really get into was about how the market's reacting to these results and what investors can expect moving forward.
Yeah, we can't predict the future, but we can analyze what we do know.
Well, based on everything we've seen, I think HUL has delivered a pretty solid performance in a pretty challenging environment. They've shown that they can adapt and they have a clear vision.
Yeah, they're not just along for the ride. They're in the driver's seat.
Exactly. And they're making bold moves to set themselves up for success down the road.
So what's the final verdict? Are you feeling bullish or bearish on HUL?
Well, investors should always do their own research and really consider all the factors. But based on what we've learned from these reports, I'd say HUL is a company with a strong track record, a clear strategy, and a commitment to creating value for its shareholders.
Well said. We've given our listeners all the pieces of the puzzle. Now it's up to them to put it all together.
Right.
But before you go and do that, we have one more part to this deep dive. We'll be back in a moment to wrap up our analysis of HUL's Q3 FY25 performance and leave you with some final thoughts. And we're back. All right, so we've reached the final stage of our deep dive into Hindustan Unilever's Q3 FY25 performance. And wow, we've really been through a lot.
Yeah, we have. From deciphering those financial statements to unpacking their strategic moves, we even got a peek behind the curtain at their company culture.
Exactly. But before we wrap up completely, I want to make sure we distill everything we've talked about into those key takeaways. The so what? What does it all mean?
Yeah, let's turn all this data into some actual insights.
Okay, takeaway number one. HUL delivered competitive growth in a really tough environment. They didn't just survive. They achieved a 2% underlying sales growth, despite facing all those headwinds, like the lower consumer spending and that rising inflation.
Yeah, it really shows they can adapt and keep going. They're not letting those external challenges stop their progress.
Right. Okay, takeaway number two. They're actively reshaping their portfolio, making some really big moves like that minimalist acquisition and the ice cream demerger. They're not afraid to shake things up if it means growth and profitability.
No, they're not. They're constantly looking at their businesses, identifying opportunities, and making sure they're in the best position for the future.
And finally, takeaway number three. Sustainability isn't just a buzzword for HUL anymore.
Yeah.
They're really weaving it into everything they do, and they're highlighting all those initiatives in their communications.
It's clear they understand that sustainability is good for business, and it resonates with consumers who are thinking more and more about a company's values.
So there you have it. HUL's Q3 FY25 performance wrapped up. A story of resilience, transformation, and a commitment to doing business the right way.
Absolutely.
But like we always say, this isn't the end of the journey. We've given you the map, Now it's your turn to explore.
Exactly. What do you think? Will their focus on premiumization and those digital-first brands really pay off? What opportunities or challenges do you see for HUL? We really encourage you to dive into those reports yourself, form your own opinions, and maybe you'll even find some insights that we missed.
Because that's what the deep dive is all about, empowering you to think critically and become an informed investor. Until next time, keep diving deep.